Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Wednesday, February 24th, 2010. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 12:30 p.m. in Hamilton, Bermuda, and 10:30 a.m. in Mexico City. If you need to reach us during the broadcast, phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. We have some economic news. Sales of new homes in the United States plunged to a record low in January. The Commerce Department reported this morning that new home sales dropped over 11% last month to a seasonally adjusted annual sales pace of 309,000 units, the lowest level on records going back to 1942. Economists had been expecting that sales would increase up to 360,000. Instead, it came out at 309,000. The stock market's up about 82 points, believe it or not. Tomorrow in Washington is the big healthcare summit. It's going to be televised live from the White House by C-SPAN. President Obama will meet with Democrats and Republicans alike to try to come to some consensus on healthcare reform in the United States. It will be great theater, rivaled only by what's going on now, which is our first story, and that's in Washington. As we speak, warming up in the bullpen is Akio Toyoda, the heir to the beleaguered Toyota empire. He's sitting right behind Transportation Secretary Ray LaHood, who's testifying now. Mr. Toyoda will be up next. He's going to apologize before the House Energy and Commerce Committee for the deadly flaws that have caused Toyota to end up having to recall 8.5 million cars. The 53-year-old chief said in advance remarks that the company grew too fast to keep up with safety controls. He said, "We pursued growth over the speed at which we were able to develop our people and our organization. I am deeply, deeply sorry for any accidents that Toyota drivers have experienced." Toyoda himself, of course, first declined to appear before the House Energy and Commerce, but he agreed to last week when he was officially invited. His appearance comes as Japan opened its own investigation into unintended acceleration with Toyota and other vehicles in Japan. It's going to be a little bit of a bumpy road. Congressman Paul Kanjorski from Pennsylvania said, "I'm naive enough to believe that a global CEO is a global CEO." He said an apology alone won't do. Kanjorski's on the committee. He said he's going to have to say more than that. We all have questions for him. Mr. Toyoda himself is not unfamiliar with the U.S. or its corporate culture. He received an MBA from Babson College in Massachusetts, and he spent time working in California as vice president of Toyota Motors. He undoubtedly knows what's waiting for him in the next hour or so. Meanwhile, people learn from others' mistakes. Hyundai Motor is going to recall 47,000 of its new Sonata sedans to fix faulty door latches. They're seeking to avoid the damaging criticism that Japanese rival Toyota faces for its handling of their own problems. Hyundai announced the voluntary recall after earlier saying it would suspend U.S. sales of its 2011 Sonata. According to an analyst, recalls have become highly sensitive since Toyota's issue. Hyundai seems to have decided to deal with these as fast as they can. Hyundai, which was the only major car maker to increase sales in the U.S. market last year, has targeted Toyota customers rattled by the acceleration problems linked to dozens of crashes. Actually, I own a Toyota Camry, and I received a letter from Hyundai notifying me that I was eligible for a $1,000 discount because I was the owner of a Toyota Camry, should I wish to purchase a Hyundai vehicle. Now to some reinsurance news. Endurance Specialty Holdings has been told that it should pursue a merger. Well, it wasn't just a passing conversation with a motorist or a person waiting for a bus. They were told this by their largest shareholder, Perry Corporation, which owns 12.5% of the company. They're a U.S.-based hedge fund manager. Its president, Richard Perry, is a member of the Endurance Board of Directors. Endurance has been responding to remarks such as these. It comes just a few days after they announced that CEO and President Ken Lestrange would be succeeded by Dave Cash as CEO and that Bill Jewett would become the president. In an announcement posted on their website last night, Endurance said that the board and management of Endurance are committed to delivering shareholder value. In addition, last week's announcement of the separation of the chairman and CEO position, combined with the ongoing lead independent director role, is consistent with the best practices in corporate governance. Perry, who is one of Endurance's founding investors in 2001, owns more than 12% of the company. He's the 9th largest holder in another Bermuda reinsurer, Platinum Underwriters. He owns 2.2% there. Endurance has a market cap of about $2.2 billion based on yesterday's closing price. Perry's main bone is this. He said that Bermuda insurers are trading below book value per share and are heavily concentrated on similar lines of business. These factors, together with recovery in financial markets, are likely to support a trend of industry consolidation. Perry described Mr. Cash and Mr. Jewett as capable industry executives. He said that he wants Endurance to capitalize on industry consolidation opportunities. Of course, he's got an eye on what Validus did with IPC last year, when they purchased IPC for about $1.7 billion and have since been reporting fantastic numbers. Also coming from Bermuda, our friends Frank Majors and Barney Schaubel are making news. AMP and MLC are among 5 Australian institutional investors that have poured a combined $166 million into Nephila Capital this year. A press statement, actually, this is for 2009, a statement noted that a large industry fund and corporate super fund have joined AMP and MLC to invest in Nephila. According to Barney Schaubel, after the global financial crisis, investors are seeking return streams that are independent from capital markets. Catastrophe reinsurance certainly provides that portfolio benefit. The trend of investors seeking non-correlated investments have been the primary driver for a strong demand for insurance-linked securities, according to Schaubel. In July of 2008, Nephila sold a 25% stake in its management company to Mann Group, based in the UK. Mann now offers Nephila's investment products across the globe. Stock market remains up about 82 points, and Mr. Toyota is not on yet. But if you're near CNN or MSNBC or C-SPAN, turn it on. We'll go to a word from our sponsors and come back with the rest of the news.
You may have already seen the demonstration of the CATEX Global Exchange in action. Some of the features of the exchange and our Pivot Point 2 software are especially useful to facultative and excess surplus lines brokers and markets. Here, we see the opening page of the contract workspace, which shows some of the details of a facultative risk as seen by the listing broker. Behind this opening page are screens which provide details of the contract of certificate, details on the parties or markets on the certificate, details of the exposures on the certificate, including aggregate data of the underlying risks, details on each of the insured risks, policy or certificate documents, including document templates, as well as automatic email links. This screen also provides links to details of the layers for brokers, the at-risk markets, premium information, policy accounting statements, the policy claims history, endorsements, and contract documents. The Pivot Point system is the backbone of the exchange platform. Pivot Point provides easy input of data as well as seamless structuring of the data into policy documents, accounting records, and statements, as well as underwriting criteria. The system allows brokers to focus their efforts on where they bring their clients the most value added, determining the appropriate layers and selecting the markets which are appropriate for the risk and layer. In these markets, timing and access to data are especially critical. For example, in a risk involving numerous properties, a broker will likely have a data file listing the properties subject to the risk. The system allows brokers to easily upload data files to the system. The exchange allows brokers to offer the risk and make sure the data are available only to markets authorized by the broker. The exchange software automatically converts the uploaded data to structured data. Markets which are interested in reviewing the risk can easily use the data to underwrite the risk. We are working on providing links to a third-party risk assessment firm which will be able to provide property-level risk of loss calculations. These are only some of the features which make the CATEX Global Exchange and our Pivot Point system especially useful to brokers and markets in the facultative and excess and surplus lines business. Please contact us for a demonstration of all the advantages you can get from the CATEX Global Exchange and the Pivot Point system. CATEX, an unfair advantage unless you are trading with us.